Hi, this is Prashil coming to you from Mumbai, and you're listening to the Equitymaster Stock Market Wrap Up. In today's edition, I'll be taking you through what moved the markets over the week. So let's jump right in. In a week full of global uncertainty, crude oil prices were the major drivers of markets worldwide. In today's podcast, we'll be looking at how crude oil prices have moved over the week and their effect on India and the rupee. We'll also be looking at the latest tussle between the RBI and the government and what it means for you. So stay tuned for that. Now a quick look at the broader markets. Asian and European indices traded volatile throughout the week over global uncertainty. Back home in a volatile week, Indian indices made a sharp recovery at the end of the week over positive results and falling crude prices. With the markets out of the way, let's look at the key stories in focus today. Market participants are closely tracking crude oil prices as US sanctions on Iran come into effect on November 4th. Crude oil prices witnessed selling pressure today as surging output eased tensions of a tight supply as sanctions come into place. Prices fell to their lowest level since April due to growing concerns that global demand is weakening at a time when output from the world's major oil producers is surging. Also, the data from the US Energy Department stating that the overall US crude oil output hit a record 11.35 million barrels per day in August, and it is expected to keep growing. This meant that the crude oil prices traded on a negative note. To add to that, global financial markets are expecting Saudi Arabia to produce extra crude oil after the US sanctions on Iranian oil take into effect in a week's time. Last week, Saudi Arabia said it would make up for the supply disruptions from US sanctions that are targeting Iranian oil. Oil buyers are seeking alternatives ahead of the start of the US sanctions and are creating a challenge to other OPEC oil producers as they seek to cover the shortfall. Now, reports have emerged that the US could exempt India from the Iranian sanctions. This indeed bodes well for India as it will be shielded from the uncertainty, and we'll be keeping an eye on how this pans out. Now, falling crude oil prices have already had a positive effect in the domestic market. The rupee witnessed buying interest and climbed over 1% today. This was seen on the back of falling crude prices and a weaker dollar. Now, this comes as a welcome breather as the rupee has been witnessing selling pressure since the start of this year. It's not just the rupee that's benefiting from weak oil prices. The aviation sector is rejoicing too. Aviation stocks shot up over 5% today on the back of falling crude oil prices. Oil prices are closely monitored by Indian air carriers as aviation turbine fuel is their single largest input cost. A sharp rise in the cost of fuel puts pressure on margins and consequently an increase in airfares. Moving on, the most talked about news last week was the latest tiff between the RBI and the government. Now it has been reported that the government has invoked a never before used law, Section 7 of the RBI Act, to rename the RBI. The law grants the government powers to direct the RBI to follow its instructions. Now, this undermines the autonomy and independence of the RBI. Understandably, the RBI is dissenting, and now the rumor mills are amok over the RBI Governor Urjit Patel resigning. If the government and the RBI are not able to see eye to eye, it could lead to a meltdown in the already weak sentiments in the market. Equitymaster research analysts Tanushree Banerjee and Richa Agarwal have both penned insightful pieces about the current government-RBI struggle to the readers of the 5-Minute Wrap-Up and Profit Hunter newsletter, respectively. They are a must-read. Well, that's all from us today. Before signing off, we would like to know if you like our podcast. Is there anything specific you want us to cover? We would love your feedback. Just visit equitymaster.com and drop us a line. We look forward to hearing from you. Happy investing.